Hello, I'm Steve Skancke, Chief Economic Advisor at Keel Point, and I'm pleased to be able to share our thoughts about the U.S. economy and financial markets. U.S. government policies currently favor investing in stocks and bonds, and the outlook for doing so through the balance of this year and in 2026 is positive. Inflation and labor markets remain a concern, and we will have additional catch-up data on how we're doing in the coming weeks. Recent news has been generally favorable, but there is continuing angst that the U.S. job situation may be weaker than the data show. So we will have a much better sense about this soon. The Federal Reserve decision to cut its interest rate another 0.25% on December 10 was cautionary and based on labor market uncertainty. But it came with a hawkish warning that additional cuts in 2026 would be limited and based on new data about labor markets and inflation. The Fed's updated summary of economic projections showed that 6 of the 19 committee members had wanted no cut in December at all and forecast only 2 cuts in 2026, with none likely until after the current Fed Chair Jerome Powell's placement is on board in May. This summary of projections also shows an increase in the 2026 economic growth forecast to 2.3% from the 1.8% they'd issued in September, and a reduction in the inflation outlook to 2.5% by year-end 2026 from the 2.6% forecast in September. The job openings and labor turnover data reported on Tuesday, December 9, showed a concentration of job losses in the federal government as expected, and construction due to the immigration policies. AI benefits continue to show up in unexpected ways, notwithstanding recurring concerns about the AI bubble. AI looks to have added about 0.5% to GDP growth so far this year, and likely will add another 0.5% to 1% in 2026. The trade wars are not over yet, but are becoming calmer as outstanding issues are being resolved, albeit more slowly than hoped. There will be less of a fiscal drag on financial markets in 2026. We are regularly asked if stock markets are overvalued and headed for a correction. Stock markets are highly valued by historical standards, and we do expect a pullback sometime in the next 3 to 4 months. But the outlook for stocks in 2026 remains positive, with the technology sector expected to continue to be a market leader. Gold is up 60% so far this year and is expected to perform well next year. The outlook for cryptocurrencies in 2026, however, is less certain and will depend somewhat on who is the new chair of the Federal Reserve next year. Historically, stock markets have flourished when the Federal Reserve cuts interest rates when the U.S. economy is not in a recession. We've seen indicators of that since the Fed started cutting rates in September. We have additional slides providing information about the economy and financial markets, and we'd be happy to share them with you. Please contact your advisor and any of our Keel Point team if you have questions or would like additional information. Thank you and best wishes for the holidays.